Welcome to today's session and thanks for joining. In these live sessions, I demonstrate a technique for swing trading profitably in any market condition by taking only high probability and low risk 360-degree trades. I am Sagar Nandi, active trader in multiple markets. I use only one trading system, Q. It runs on Metastock and TradeStation platforms. Q has multiple components. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. We will start as usual with charts of instruments that often move the market. But I wanted to mention one thing. I make these weekend videos once a week. Doesn't mean that trading opportunities come only during the weekend, and you know that. Some of the best buying opportunities had come during the week, last week, and I hope you could capitalize on at least some of them. Now the market is already up for 4 or 5 days in a row, and now I am reluctant to buy. There are other reasons for me to be reluctant to buy more now, and I'll explain those in the market recap. What it also means is that it is important to look for trade setups every day. If you can, takes only 10 to 15 minutes, look for trading ideas. If you find some that matches your trading style, you may take a trade without, of course, waiting for the weekend. These weekend videos will not be enough. You may run the scans and find trade ideas during the week as well. That's what I wanted to mean. Let's start with charts of instruments that often move the market, starting with dollar index ETF UUP. As was somewhat expected from the upper boundary, after displaying the bearish indecision and then a bearish headwind, UUP pulled back and stopped right at the trendline support. As I mentioned in the last market recap, I am not expecting the trendline support and then the multiple direction lines, both white and yellow, to be broken in one go. And if they don't break, if price can pick up again from one of those support levels, then the uptrend will be intact, and if that happens, it may put pressure on the market, and of course you know that inverse correlation does not always work. The other market level instrument that influences the whole market is mega cap custom index, that is directly correlated with the market, and that direct correlation always works more on some pockets than others. Mega cap custom index was underperforming the market for a long time. It created a false upside breakout at a level where bearish headwind had come earlier in the weekly backdrop chart. Price fell with backdrop color being bearish for 4 weeks, and this week it flipped to bullish color with a bull release signal in weekly. Does it make mega cap custom index very bullish? No. Why I say that is, if I look at the daily, it still does not have higher high, higher low. It has lower low and slightly lower high also. So it does not have higher high, higher low. It is not in an uptrend. a bullish week did not change the trend from downtrend to uptrend. The other thing to note is that in the momentum chart on the right, we have a not red candle, we have one ice hole failure. That is when price tries to go above the 50-day moving average from below it but fails. That creates one ice hole failure. Ominous name, isn't it? It can be ominous if it can come down from here, then it will reconfirm the downtrend, and that will be a time to look for shorts. One reason that I am reluctant to buy stocks now. Price has already gone up for several days, and this we will see in many market level instruments, not only in mega cap custom index. Next, Q market breadth internal health check. Usually the market follows the internal health, not the other way around. Usually, but not always. Why? Because most people are looking at, and certainly the newspapers, media, websites, they are all reporting on the major indexes, and most of them are market cap weighted. The market cap weighting can hide the weakness of the market for a very long time. Doesn't mean all stocks are going up. That the market is at or near all-time high does not mean many stocks are near or at all-time high, and you already know that. The internal health shows the true health of the market without being filtered through that market cap weighting. I already posted the market breadth charts on my Twitter page, X handle Superior Profit. Let's have a look at them from X. And here we will find some more reasons why I am a bit reluctant to buy. Percentage of stocks above 50-day moving average. It recovered significantly from the low here, the yellow line. However, it is still not bullish. It is just below the midpoint of 50%. That means this recovery in terms of internal health, it is a recovery in a downtrend. What is in favor? Growth versus value is still tilting down. So growth is not in favor for quite a long time. Since when? Since the Hindenburg Omen cluster started to come. So in that way, market's weakness in terms of growth underperforming value started when the Hindenburgs came. That is why it pays to notice the Hindenburgs and then adapt your trading strategy accordingly. The other thing that is not confirming here is the 3-month new high low. This line, it is very close to being extremely overbought. Not yet, but that is why we drill down from the market breadth total view to the individual pockets. First to Nasdaq and NYSE, I'll only point to the essential things. The others you may pause the video and read the chart if you are interested. Notice the 3-month new high low in NYSE. It is already hitting the extreme overbought condition. I learned to use it after watching Dr. Jeffrey Scott's videos. It doesn't mean that the market will necessarily pull back, but at least some stocks will pull back. That usually happens, and using Q you can easily find those stocks. Usually they give lucrative reversal trade setups. And here I would like to make another comment, general comment about trading. Many people are trend following traders, and that is for a good reason, because trend is your friend, my friend also. I take trend following trades all the time. Q has flow trade setup, Q has pullback trade setup, and few other trade setups that can be trend following also. But if you think of a stock's price move when it is going in a downtrend, at some point it will reverse. It may not be in an uptrend immediately. At the reversal point, what kind of trade setups can we get? If we are using Q, we could get a headwind trade setup, we could get a box trade setup, and we could get a bounce trade setup. Bounce being the most extreme low catching trade, because bounce setup is defined as a reversal from a pre-existing trendline support to which the stock drops sharply and suddenly and then bounces off that level. That is an extreme reversal setup, and after that comes probably headwind, then box. Why I mentioned that, when you see that we have 3-month new high low hitting extreme overbought level, we are not expecting to get trend following short trades from those stocks. If they pull back as they usually do, those will be reversal trades. Stocks that were going up and they will start to reverse. What kind of trade setups again? They will be bearish side, but the same trade setups, headwind or box or bounce if we are lucky. Why I say lucky? Because those are very low risk immediate trades and not difficult to find if you are using Q systems. Those memory trend lines work well. I'll try to find some if I have some today. So when I see this 3-month new high low hitting extreme overbought, I am looking for reversal trades. When I looked at Megacap custom index giving one isol failure, am I expecting a trend following short trade from there? The chart that I described just a while ago, let's go back to that. This is a nice discussion point. We don't have to take only trend following trades. If we take only trend following trades, that's all right, but we don't have to. If we see the Megacap custom index, I mentioned it is not in an uptrend yet. If it comes down from here, it will give a trend following short trade if we look at the momentum chart. If we look at the Q charts, it may not give a trend following short trade. If we look at the momentum chart, okay, there is no Q trade setup based on the momentum chart. So if it reverses in the daily on the entry chart template, I may look for a pullback short setup, or I may look for individual megacap stocks giving trade setup. That is different. Megacap custom index is different from what I was describing in the 3-month new high low, which is at extremely overbought condition. Megacap custom index is not in extremely overbought condition because it is below 50-day moving average. That cannot be extremely overbought. If we further drill down in terms of market breadth to major pockets, small cap is again extremely overbought in terms of 3-month new high low. Mid cap is also extremely overbought in terms of 3-month new high low, and even large cap is extremely overbought. What is not extremely overbought is Nasdaq 100. Why? Because it is most influenced among the other all the other pockets, most influenced by mega cap stocks, and we saw mega cap custom index is below 50-day moving average. It cannot be extremely overbought, and that is influencing Nasdaq 100 the most, and that is why Nasdaq 100 is not extremely overbought. In other way, Nasdaq 100 is actually weaker than the other pockets if you look at that. Can it rally next week and become extremely overbought? It can. That is what the market has been doing for quite a long time. Sometimes small caps are outperforming, soon after large cap mega caps are outperforming. That may happen. But as of today, that may happen, may not happen, we don't know. What we know is that right now, out of these 6 market pockets, quite broad, four of them, that is small cap, mid cap, large cap, and even NYSE composite, a very broad pocket, all of those are at extremely overbought condition when seen in terms of 3-month new high low. That's a reason I'm reluctant to buy in the current market situation, though we'll see from external view it is looking quite bullish. But before that, I would like to see the total view custom index using weekly, daily. Not sure if we'll have enough additional information from there or any additional information from there. Let's have a look at that. I'm doing it live. We have some additional information. Here also, after the bearish indecision and even more important, the bearish headwind, price came back and this week it reversed sharply. USA total view, the broadest view of the market, is also at the very top of the week, closed right at the very high. That is looking very bullish. Again, if I look at the daily, does it mean it is in an uptrend? No, it is still having lower high and lower low. A rapid rally even for 5 days. This was a 4 days week. So started from Friday of last week when the candle shape was indecisive. So it was a rapid rally from the low, but it is still in a downtrend. It stopped above the trend line resistance. If it reverses down below the trend line resistance next week, it will create a false upside breakout, which is even more bearish than just reversing from the trend line resistance. So I'll keep an eye for that, and that is another reason I'm not minding keeping some stocks for shorting in watch list at least. Okay, that was the market breadth study. We saw the total view closed right at the high of the week. Let's look at the external view. This is how most people around the globe see the market. I don't want Trade to feel bad. I love Trade also, so let's use Trade for the external view of the market, SPY. What is striking across probably all the market details we'll see, closed right at the high of the day. Of course, this was a holiday period week. Weekly volume was very low, and if you watched, I did watch Dr. Jeffrey Scott's Black Friday webinar, very informative webinar. He kept on mentioning about it that the volume was very low. So that is nullifying some of the bullishness, or at least tempering some of the bullishness seen from the candle shape in weekly or the rapid run up in the daily. We can see also as the week progressed, volume started to come down more and more. That is one concern, but that is usual. It's a big holiday period. Don't expect volume to go up in such a holiday period. SPY rallied in weekly, but that did not mean that SPY turned into an uptrend in daily. Weekly rally, daily of course rallied, otherwise weekly could not rally, but daily is still in a downtrend. If it again comes down below the trend line resistance next week, that will create a false upside breakout. From a trading perspective, I may wait for that. I may look for that even from a trading perspective. Okay, that was SPY. Very bullish week, but bit late for me to enter. Last week when we were here, I shared only bullish ideas, though I was not very comfortable sharing them as concrete ideas because of the close of the candle was much below the high with an upper tail. So I shared two trading ideas. I'll relook at them later. On Monday, as the market ETFs went above Friday's high, you could start to buy some of those stocks, and during the week you could buy some more probably. We'll look at those stocks, but let's continue with the external view. QQQ, it will be very similar. I'll not point to all the areas again, you can just see that weekly is again very bullish, closing right at the very high, but daily still is not in an uptrend. Dia, weekly very bullish, daily still not in an uptrend. What does it mean again? Not in an uptrend. Daily does not have higher high, higher low. And IWM, small cap, weekly again very bullish, daily is not in an uptrend. Why? Because it does not have higher high, higher low. One thing to note, what did we have from last week's low across the board in all the market ETFs? We had a sharp rally. What kind of trade? I just explained a while ago. What kind of trades we get at those reversal points that are very lucrative? Those are reversal trades, not trend following trades necessarily. The lucrative ones are reversals because stop loss is very nearby and relatively the reward is much higher. So what kind of trades we could look for? We could look for trend following, but we could also look for bounce trades, for example. Okay, across the board, all the market ETFs rallied, but they are still not in an uptrend in daily. That is one thing to note. Let's look at Q Edge now. Bucket analysis is there. Again, thanks to Dr. Jeffrey Scott. After watching whose videos, I incorporated it in my trading discipline. Pinpoints reversals with remarkable accuracy. Probably we don't have any signal from bucket analysis today. It also has sector, industry, stock breadth. It shows where the market came from, where it is now, and where it may go next. 78% of S&P 1500 stocks, very nice mix of large, small, mid-cap stocks, are above mid-Bollinger Band. So now it is bullish. Until last week it was not bullish, but from bucket analysis perspective it is bullish now, but it is not overbought. So from bucket analysis perspective, the market can go up further, and it will not be surprising that at least some of the market ETFs hit new all-time high. When the market ETFs are so close to making another new all-time high, it usually tends to do that. We'll see if that happens again this week, but it will not be surprising at all. Just couple of percentages away from making another new all-time high. If we look at multiple periods from longer term to shorter term, interestingly, 1 month period is still bearish, but all the other periods have turned bullish. This week's rally was very broad rally, not just in some pockets, it was broad rally. And we saw from total view, though it was broad rally, what was favored was small cap value, if you noticed. What does it mean? Small cap value means stocks that were underperforming earlier, they rallied more than others. But across the board, we can see here the market rallied this week. This chart, these graphs don't allow us to short yet. The external view also did not allow us to short. The internal view also did not allow us to short, but it told us that it is becoming overbought. Only thing that told us to be ready to short was actually the mega cap custom index, because it created one ISOL failure. Let's continue. Continue with what? Continue with the last aspect of market level analysis that I do, Q Finder technical breadth. Then here I'll show more reasons of why I'm reluctant to buy. Only profit by buying stocks. We only profit by buying stocks going up or shorting stocks coming down in directional trades. And Q Finder helps in that. Technical breadth shows the overall posture to adopt and allows easy drill down to find low risk trade setups. Remember last week Q Finder daily breadth charts, that was one essential component for me to decide to share only bullish ideas, and we'll see what it is telling this week. What it is telling in the weekly chart is that across the board for weekly technical breadth, all the four categories are 90% bullish or much more, going up to even 97. This is extremely bullish condition. So this is also telling me that it is a bit late to look for many buying opportunities now. Doesn't mean it cannot go up. We don't have the reversal yet in any of the market ETFs or other charts, but it is telling, just like the 3-month new high low in 4 of the 6 pockets told us, that it is getting extremely overbought. If we look at Friday's technical breadth, it is overall very bullish, but reversals are more bearish. That is in line with my thought of looking for reversal short candidates. If at all we look for shorting candidates, maybe shorting watch lists, I should say. Though reversals are more bearish, I have to add that absolute numbers of reversals are bearish side are much less. Uh, sorry, let me rephrase. Though reversals are more bearish than bullish, the actual number of bearish setups is actually much less than bullish setups, so that we have to take into account also. It is a very bullish market, but reversals are starting to appear. Another thing to note here, because we are looking at all the graphs, we saw high sold failure in mega cap custom index, and red candle high is nowhere near the 10% threshold where we get a breadth alert, but it is not negligible also. 5% red candle high, that is something to keep in mind. Q market level summary, the most important trading decision. And if we combine the insights from what I went through, that is not a difficult decision. Objective decision is not easy, not difficult. The most important reason is whether and where to buy or short, or whether to stand aside. I'd like to stop buying now, and I'd like to look for shorting candidates. I'll not short them. I would not short them at the close on Friday, because the markets close right at the high of Friday. But if market starts to reverse on Monday or Tuesday, I would not mind looking for shorts. I would like to stop buying more stocks now. Review of last week's trade ideas. I was reluctant to share any concrete trade ideas, that's why I didn't list them, but I did look at 2 stocks. One I added, in fact it may still be on my meta stock, Code Center. I was demonstrating the workflow, and I added only 1 to candidate long, 1 to watch list long. Let's look at the candidate long stock. Open in Code Center. That was CTSH, Cognizant, one IT stock. I'll not go to the weekly daily. I identified it on this day, and the stock has gone up this week. This was a 4 days trading week. So 1 to 4 days. Monday it pulled back little bit, and then Wednesday, Tuesday, whichever 4 days it went up. Okay, so it went up, it made some profit, and this was a breakout short, sorry, not short, long setup. And let me go to TradeStation CTSH. I can look at the historical trend lines to confirm that it was a breakout short setup or not. And I came to that point for a reason. Yes, it was a breakout long setup, bullish setup I shared last week. Why I came to this point, earlier I discussed about reversal trade setups and those being possibly more lucrative than others. So this was a breakout trade setup. If you notice, the stop would be somewhere here probably. There was no gap, so safe stop would be below recent low. So the stop was not very narrow. Whereas if we are able to get a reversal trade setup, maybe not, I'm not seeing that on this chart, but I look for other chart. If we get a reversal trade setup, the risk would have been very narrow. That's why I said that reversal setups can be very lucrative. In any case, CTSH went up, made a profit if you took it during the week. The other stock that I shared as a watch list long candidate, where is that watch list long here? Still getting used to the latest version of Metastock. That was TTMI. And this is a good stock to look at, keeping today's discussion in mind. What trade setup was this? I identified it on this day. And notice the difference between CTSH here, identified on this day, breakout setup, and TTMI, identified on this day. Both were using trend lines. One, CTSH, was using trend line breakout, and TTMI here was using trend line support. So it was a bounce long setup, which is, as I mentioned, the extreme reversal trade setup. And that is why it was very lucrative. We can see that also it has given much more profit than risk in the trade. In any case, both the stocks I analyzed last week, bullish trades, they gave a profit. What did I say in the last market recap? One thing I emphasized, I was not ready to short. That was very clear. That's why I started looking for longs. What am I saying this week? I am not ready to buy. That's why I may look for shorting opportunities. This week's trade ideas. I would like to look for shorts, but again, just like I did last week, during weekend recap, I was not ready to buy as of Friday's close last week. And this week, as of Friday's close, I was not ready to short. But I look for only shorting ideas now. Now, if you look at my candidate short, I'm using this for managing my watch list. Let's open it in Quote Center. These two stocks I listed not on Friday, before that. One was Navi, one was QGen. Let's look at them. I'll explain one thing. I identified this stock. You can see the ticker from here, Navi, N-A-V-I, Navi. I identified it on Thursday in my candidate short. What trade setup was it? It was a bounce short setup, right at trendline resistance. What happened on Friday? The market rallied. What did this stock do? Came down little bit. Yes, it has a long lower tail, but it has a solid body. It has a red activity bar, so it came down little bit, meaning it underperformed the market quite a bit. Market closed at the high of Friday. This one came down for the day. Trendline resistance works very well. What was the other stock? QGen. Alt right arrow to move to the next stock. I could resize the Quote Center. I identified QGen, added to my candidate shortlist. As I mentioned, we don't have to look for trade setups only during the weekend, isn't it? And you do that. I'm sure I do that too. I look for trades during the week. On Thursday, market was rallying, but I identified these two shorting candidates. Again, a bounce short setup. Very lucrative because the stop losses are nearby. What did the stock do on Friday? Came down, though the market rallied. That is the power of the Q trade setups, and you could combine them with the industry score and fundamental score. So let's look at Q finder, go to bearish setups, look for bounce setup, flag for the bounce column, only one stock. What is that? ALDX. You can see that here, ALDX. What did this stock do on Friday? Came down by almost 2% when the market rallied. It is a possible bounce setup. It's Alderia Therapeutics. By the way, QGen that I identified, I shared just now. QGen, I identified bounce setup on Thursday. That was in also biotech pharma industry, and this one from the name it looks like also in biotech pharma. Let's look at its fundamental scorecard first. Now I also say that if of all the dimensions I have to ignore any dimension, I do sometimes ignore only one dimension, that is fundamental, and that is only for shorting. For buying, I don't ignore the dimensions. What are the dimensions? Market, industry, fundamental, technical. Fundamental I may ignore sometimes for shorting, but not the others. So yes, ALDX, ALDX is in biotech industry, and this one-page scorecard had a lot of insight. 61% peer stocks went up on Friday. Not unexpected because market rallied across the board. But that this stock came down on such a rallying day, not only at market level but also industry level, shows this stock is considerably underperforming on Friday at least. Yes, it has some earnings growth, but we put that in context. It's a small cap. You can look from the color code of the background of the RIC symbol. This color is small cap. So it's a small cap biotech showing some earnings growth, but we may not look at only that, because we look at also whether the company is making profit. It is not. Across the board, it's a loss-making company, not unusual for small cap biotechs, has zero revenue. I would like to short a stock like that, ignoring the apparent improvement in earnings growth, because it is not making any profit, has no revenue. The stock came down when the market rallied, even industry peers went up overall. Now, how is the industry scorecard? Dr. Jeffrey Scott also mentioned in his roundup that the biotechs were starting to underperform. It's very clear from this industry scorecard, isn't it? It was one of the strongest. Now it became one of the weakest, and it is one of the most decelerating. On a day when the market rallied close right at the high across the board for market ETFs, biotechs came down. I'd like to short in an industry like that. So the industry allows me to short, fundamentals allow me to short. Let's look at the stocks. Technicals now. It has a possible bounce setup. ALDX. Do you also see from all the market recaps how comfortably I change my preferred trading direction from bearish to bullish to bearish to bullish, so on and so forth, based on how I'm looking at the market. If the trend line resistances were not there, if the memory lines were not there, it would be very difficult to identify it as a short candidate. But we have the trend line resistances. It shows that in weekly it had a very sharp drop, rallied back up, as is not unusual, but stopped right at so many trendline resistances in weekly, stopped at the trendline resistance in daily, came down, has high volume near the reversal. That is giving me a bounce short setup. I don't have any position in it. As I mentioned, Same as in last week's market. As of Friday's close, I would not like to short this week. But if it starts to go down next week, I would not mind shorting a stock like ALDX. So let me add that as my short candidate. Again, if the stock goes up next week, I'm not going to short it. I'm not holding any position. If it goes down, I would not mind shorting it, putting stop just above the recent high. That is my stock pick of this week. If you carry out the 360 degrees analysis using Q like that, you will most likely find other trading candidates today just as you would almost every other day. Thanks a lot for joining. I look forward to seeing you in my next session. Have a great weekend. And as I always say, as these live examples week after week on YouTube and Twitter show, I'm quite confident shows there is no reason not to do that. Trade profitably. Thank you.